Okay. Good afternoon, everyone. I'm happy to introduce to you John Moses. He's the deputy director of investor education and advocacy at the SEC. They've done a lot of work in this space and dealing with financial education and investor education as well as with financial inclusion. So I'm happy to have John to join me today to share with you all the work they're doing at the SEC to just change the economic equities in this country. And he has some good information he's going to share with you. Then I will come back later and ask him some follow-up questions regarding some of the things that they're doing there at the SEC that you'll find very useful. John?
Happy lunch, everybody. I am John Moses, as Mr. Daniel said, really a pleasure to join you and join this conference. Happy to have partnered with the Society for Financial Education and Professional Development for a few different events. And what I'll do today, since we have a limited time, is just share a couple of updates and reminders about the SEC, some recent developments or things that have changed over the last couple of years and might be touch points for your clients, if you're a professional or if you're a financial educator or support financial educators or engage with students. Want to make sure that you are aware of these topics in your work, and then look forward to coming back and chatting a bit more with Mr. Daniels. So with that, we'll get started. First, we always, as the SEC, have to provide a disclaimer. So this content is my views and does not necessarily reflect the views of the commission, the commissioners, or other members of the staff. I was just sort of watching both your conference and the Economic Inclusion Conference that the administration is holding today, and heard our chair, Gary Gensler, give this as well. So everybody's got to give this disclaimer during public comments. So a reminder on the SEC's mission. So we protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. So really, if we think about the markets in between those two groups, as our chair likes to say, on the one hand, there's the goal of raising capital and putting it to work. On the other hand, there's investors that provide that capital. In between is the markets, and these are multi-trillion-dollar markets. And the SEC is involved in many different aspects of their proper functioning. I want to highlight for the first time, but not the last during this discussion, investor.gov. We hope that you'll use this as a resource for information, for research, for getting up knowledge and perspective on emerging topics. So this is also how you can contact us if you have concerns, if you have suspected fraud. There's links for that throughout. One of the things that I personally like, as you see on the top bar there, is financial tools and calculators. So certainly check that out as well. Finally, a topic that came up today around information in other languages, there is a Spanish language section. You can link to that in the upper right corner. So we'll come back to some of the content here a few times at investor.gov. Again, we think this is a very useful resource. So today we'll go over some recent trends, provide some reminders for you and the people you support around protecting yourself and how SEC resources can help you in that, and then come back for a further discussion on financial inclusion. So we'll just dive right into it. So you all are used to teaching. I think this will be a little bit of a class or a reminder as we go through the study version. So Reg BI, this is regulation best interest. As you connect with students and with others, we want to make sure that you're aware of some terms that and initiatives and trends that might have been might be more prominent over the last couple of years than may have been the case 5 or more years ago. So one of these topics that you might not have heard about before a couple of years ago is regulation best interest. So Reg BI is it's a major new rule at the SEC, and it requires brokers to satisfy 4 specific obligations. So they have to disclose, they have to provide, they have a care obligation, they have a conflict of interest obligation, and a compliance obligation. So this is really a framework for what brokers, when including the platforms that you and students you might support, or young people you might support in their financial wellness journey, they're subject to these requirements. So much more on investor.gov, but want you to be aware of that topic. An attendant topic is Form CRS. This is the customer relationship summary. And if any of you have a brokerage or investment advisory relationship, you will have received one of these. You can also access information about it, as well as the specific form for your professional on investor.gov. And this form is supposed to, in a simple, straightforward way, explain the services that are being provided, the fees and costs, conflicts of interest, required standards of conduct, and any disciplinary history that might exist for that firm or that representative. So again, this is meant to be a simple, digestible way to access this important information. And this is, a relatively new form. And again, every organization that you would be dealing with will be providing one. And if you don't get it, you can see it and access them by firm on our website. A couple of other, and I'm jumping around a little bit here, but the goal is to emphasize some of the changes and talking points and concepts that you might be familiar with, but we want to make sure that you know where to go for more information if you or people you support have questions on them. So one topic we get a lot of questions about is securities-based crowdfunding. So we're probably familiar with crowdfunding that's meant to support a cause, or support a product that might not provide you equity in the enterprise. There is also securities-based or equities-based crowdfunding that has really started to grow. There's actually additional provisions now that allow you to raise capital, that allow businesses to raise capital up to now $5 million in a 12-month period. These are securities offerings that are undertaken usually through a web-based funding portal. Some of the people that you support or connect with need to understand that while these might be very interesting investments, they are also certainly speculative and illiquid. Much more information around equity crowdfunding on our website and on the website of our Office of the Advocate for Small Business. So that's an SEC office that is very much engaged in supporting small businesses and their investors. But people need to understand where this fits into a potential portfolio and into their overall financial picture. So more information again on investor.gov there on equity crowdfunding. Another update is Edgar. So Edgar hopefully can be part of your, and we'll come back to this with Mr. Daniels, I hope, part of the journey that you take on educating the people you interact with. So Edgar is the electronic data gathering, analysis, and retrieval system. And this is where you'll find the official source for 8Ks, 10Ks, other statements and disclosures. And you can search by company and see all of that information there. Again, it can be a great tool for gathering additional information before making an investment. The disclosures that companies make are right there. Hopefully it's obvious how this can be part of your financial education journey. If someone has an interest in a particular company before investing, public firms will post their content here. So a couple of trends to go over. Certainly we've been aware of social media as an avenue of financial information. And we just want to highlight the risks of short-term trading based on social media. So of course, markets can be volatile and losses can be significant. If you're using margin options or short sales, you can magnify those risks. And brokerage firms may be able to reject or limit your transactions. We have to also be careful about manipulation and other types of problems or potential violations even of the securities laws that can take place, but that can result in significant losses. And that sort of fits into this larger theme of timing the market versus time in the market. So I won't go through all the details on this slide, but I think that most of us are aware that active trading can result in underperforming the market overall. And while we might have an interest in individual stocks, and certainly that can be an approach, there can be a lack of diversification if you're focused narrowly on individual stocks. And a certain corollary there is that there's been a number of studies that show that if you miss the best performing days in any given time period, that can significantly damage your long-term returns. And so the area of interest there, of course, is that if you're trading actively and trying to time the market, there's periods when you're out of the market, you're not invested. But of course, if that period coincides with some of the best performing days of the market, you can damage your long-term performance. So again, we certainly advocate that most wise investors are focused on time in the market, not timing the market. A couple of other considerations when using investing apps. Certainly these can be very convenient tools and can be lower or commission free, but you should understand costs and commissions and how they work in your particular platform. You should understand what human interaction may or may not be available if you need help. And you need to understand that some of these apps might give new or inexperienced investors access to complex products or strategies that that one needs to understand before investing. Also, and this again is a topic much in the media, we need to be careful and understand the risks of over trading, especially as may be encouraged through quote unquote gamification to celebrate active trading. All things to keep in mind. I'll speak just briefly about fractional shares, another topic that has come up quite a lot recently, especially with certain popular stocks having very high per share costs. Certainly this can be a way to access fractions of those shares that might not otherwise be inaccessible. Check and see though what the fees and costs are, and understand that generally those fractional shares are not transferable. So if you move your brokerage account, you would probably have to sell any fractional shares and move the cash, which could have various implications. So certainly, an increasingly topical conversation around fractional shares. And again, we have more information on investor.gov on this topic as well. Finally, SPACs. So this is SPACs are special purpose acquisition companies. We have a great deal of further information on investor.gov. They might be topics that your constituents or the people that you engage with, students especially, might be asking about these. If you've been around for a while, these used to be called blank check companies in a prior era. And basically what people do is investors would invest in the IPO of a shell company that the sponsors use those proceeds and determine an acquisition target. That is a private company that they then turn public. There's usually a 2-year window to find an opportunity for the SPAC, for it to make an acquisition. Again, a lot more information on investor.gov, but a topic and a term that you hear a lot about that you can, if you feel like you want to get a little bit more information and get more up to date, we have further information on investor.gov. So reminder about basic ways to protect yourself. You can check any investment professional on investor.gov, including their license and registration, employment history, and any disclosures. Similarly, you can research any investment product online. So you can check, is it on Edgar? Is it registered with the SEC? Does it, again, many scams involved unregistered companies, and Edgar has important information about firms that you might be interested in investing in. Common things that we just always want to emphasize in protecting yourself: be aware of persuasion tactics and red flags of fraud. Be alert to common investment scams, and research both the financial professional and the investment product that you're considering. So these are just important reminders to provide to, think about yourself and to provide to the folks that you interact with. Things like pressure to make a transaction quickly can certainly be red flags, and we have others listed on investor.gov, which I will say again for the at least the 5th or 6th time. But please head to that site for additional information. And then finally, if you need assistance, you can reach us at the number there, or help@sec.gov. If you'd like to arrange an investor education event, you can reach us at outreach@sec.gov, and we'd be happy to connect to provide an in-depth presentation to you or your group, whether that's students, professionals, or others. So that's a quick update and some reminders. I would love to now turn it back over to Mr. Daniels and talk about how this might fit into some of the other broader topics of financial inclusion that we've been covering in this conference.
That's right. That's good. That was very informative, John, and insightful. And even the new terms, a lot of people don't know about SPACs, and crowdfunding. I found that very intriguing too. And when we talk about crowdfunding and regulation best interests, can you elaborate on that a little bit more before we go back to financial inclusion?
Sure. So, I think these are actually very much related, right? So, um, the markets are evolving. Our chairman has certainly talked about this. The rate of technological change is increasing. It's really important to stay up to date on these different topics and again how they impact you. So, oftentimes we do what is or interested in what's sort of newsworthy rather than getting the fundamentals right. So I
Right.
would say two things. One, even as we talk about these, make sure that we're focused on the fundamentals. Two, they can still be a sort of window or a hook to connect with students and others about the fundamentals. So foundational things in investing include understanding the investment product and understanding who's selling it to you and what conflicts they might exist, for example. So for Reg BI and the attendant form CRS, the customer relationship summary, that's actually a great educational tool because it distills those topics and says, while they're important, in and of themselves, it helps us, focus on those issues like, understanding what conflicts are there, understanding fees, as I think you'll probably cover elsewhere. Even what might sound like a low fee, say 1% might sound low, right? But as we know over time, fees have been driven down, and 1% can have a dramatic impact on one's wealth over time if you're reducing your returns by that 1% fee over time. So Form CRS and Reg BI help help emphasize and clarify those core concepts, and I think can be an educational tool. With crowdfunding, again, I hope that people will go to investor.gov and go to our Office of the Advocate for Small Business Capital Formation and see what's happening in that space. A lot of people are interested in raising money for smaller ventures or in supporting smaller ventures through equity crowdfunding. And the core principles still apply, but there's some additional things to keep in mind. I noted in the talk before, these are largely illiquid investments, right? So unlike investing, through a traditional public company that trades on an exchange, you might, in addition to being, speculative, this might be locking up your money in an illiquid fashion for a long time, even if the investment is successful. So an exciting sort of evolution of the equity crowdfunding space, but one needs to go in with with their eyes wide open, understanding not just the opportunity, but also the risks.
Yes, right. I like that because when I think about crowdfunding, I said this is money being raised outside of Wall Street. It's not money that's on the New York Stock Exchange or the Nasdaq being raised. Now you hear about financial inclusion a lot, over and over again, but and you talk about it. People talk about it in association with the wealth gap. So how does investing fit into the wealth gap or closing the wealth gap? You want to elaborate on that?
So we had our World Investor Week a couple of weeks ago, and we're thrilled to connect with a number of different organizations around the country, military communities, seniors, students, including an event that our chairman Gary Gensler and I joined with a number of HBCUs. And one of the things that our main site tweeted about was that in large regard, the wealth gap is an investing gap, right? So if you look at ownership of sort of common investment vehicles, so retirement vehicles, for example, there's some statistics around this at how Black Americans are underrepresented, compared to white Americans and Americans overall in holding retirement accounts, right? And so that's something certainly that we hammered home at that event, and what we're going to do at another event tomorrow is the importance of getting started early in your career investing, so that at the midpoint and later stages in your career you will have had time for your investments to grow, despite the expected volatility in the interim. So there's this sort of basic issue of, there's all kinds of, I know that at your organization you talk about the housing as a incredibly important element of building wealth and therefore closing the wealth gap. Just want to emphasize that investing over the long term and using some of these foundational principles that we've talked about and you've talked about elsewhere at this conference can be just incredibly important in closing that wealth gap. And we've heard of the data, right? Depending on what you look at, 8x or 10x, Black Americans, white Americans have 8x or 10x the wealth of Black Americans on average, and is directly related to investing. So this is issues like holding these types of accounts, or is indirectly related to investing, because we know that so much of it comes from intergenerational wealth transfers, right? Which often tie back to differentials in investing, and there's just a lot of data and interesting information around that. And hopefully one of the things that this conference and your continued engagement on these topics can help is to make sure that people have an awareness and access to these products and to the long-term wealth generating opportunity of investing in our securities markets.
Exactly. I always tell people that there are two ways. There are two ways to gain wealth in this country is through um, acquisition of financial assets, as well as home ownership. If you have those two going for you, where you making investments in the markets, be it mutual funds or individual stocks, bonds, you got a greater chance in gaining closing the wealth gap as well as home ownership. And before we close out, we talked some time ago about two careers, two careers concept. Can you explain how that works in terms of financial inclusion?
So I think that this concept. I know that one of the things that I really admire about your organization is that you think about the investing side of things and the professional development side of things, right? And so another major element of the wealth gap, of course, is an income gap, and there's a lot of important organizations like yours working on this. Like I said, the administration had this other event today at Department of Commerce that was focused on this, and is really looking holistically at this concept of you need a career to generate money, right? This is your income. This is the money that you generate as a teacher, a doctor, a lawyer, a truck driver. It can be any whatever career you pursue. Hopefully you don't spend all of that money, right? But that's your first career. Your first job is that generating income. Funds that you don't need to live are invested, and that second job or second career is really tightly tied to what was discussed earlier, and I think what you'll be discussing throughout this conference. That second career is ably, wisely investing that excess income to build wealth for yourself, and really proactively addressing that as an important element of wealth creation, maybe as important or over time more important than the income that you generate in the career you choose, is what you do with that income. So taking advantage of retirement accounts, of investing outside of retirement accounts directly, taking advantage of these key concepts that we talk about: asset allocation, diversification, minimizing fees, hopefully also avoiding fraud, as we talked about, and really being able to leverage our robust capital markets to build wealth. So that second career, managing your money, which might not sound like much at first, can just be incredibly valuable for young people, because wealth often takes two elements, right? One is money, and the
Yes.
second is time. And if you don't have a lot of money to start out with, you can very proactively and hopefully wisely over time manage your funds to create wealth, leveraging the superpower that young people have, which is time. So hopefully those two careers, if you will, over time can help close the wealth gap and generate a meaningful progress for yourself, for your family, for your community. And if you or any of the folks listening want to delve deeper into any of these concepts, hopefully they'll visit us at investor.gov or connect with us at outreach@sec.gov.
That's good. That's really great. Really great, John. I really appreciate you taking the time to join us during our luncheon break today. I found it very informative. I'm sure the conference attendees found it very informative. All that you said, very informative too. And continue to stay with. Hopefully, you can stay with us for the rest of the day. And we have a lot of new subjects coming up this afternoon and tomorrow. And
Button issues there. I'll look forward to it. And I just want to shout out to Miss Tweet, it looks like, that uses Edgar for an assignment. So I love to see that.
yes, it's sweet.
Thanks so
Yes.
much.
Yeah, that's good. That is good. It's sweet. Okay, so you got your products being used or used. That's good to
Absolutely.
know. That's great. Okay, so as I said, we have other sessions coming up this afternoon. So to the conference attendees, if you want to move on to the next sessions coming up, and choose one that you would like to attend. As I said, they're all very competitive throughout the day, and if you want to flip a coin or go back and forth to from one session to another, please do so. Again, John, thanks very much for joining us today, and we look forward to our continued partnership and relationship as we try to enhance the investor knowledge throughout the country. Yes.
Thank you, sir.
Mm-hmm.